So this is going to be a short video about how I'm going to afford the electric vehicle which I'm choosing to buy, which is this car up here. I could have stretched myself a little further and afforded a Tesla or something like that. And I've got another video on that if you want to check that out for why I chose this car. And I'm hoping that they'll be as useful for you as they are for me. So I have to give a disclaimer, I'm not a tax specialist. I have some accountancy background, but I'm not a tax specialist. So I'm just going to go to the government's website here and show you the main pieces of tax law that we're going to rely on here to make our savings. So at the moment, so this only works if you've got a company, and I've set up my own company, which I'll talk you through a bit later. I should also mention that there is a simplified mileage thing that would make sense if you've got a second-hand car, but what I'm looking at here is for a new car. There are some rules about what you should be using your car for. It needs to be mainly for business use, and the bit which we're going to rely on is that new cars which are electric qualify for a first-year allowance. And what a first-year allowance means is that you can claim the 4-year allowance against any profits. So what that means is for the money that you spend on a car, you don't need to pay the tax man anything. You get that money effectively tax-free in order to pay for the car. So there are more difficulties if you don't choose that first bracket of car, because there is a writing allowance which you have to do, and that you will need an accountant for because it's a bit more complicated. You have to spread the cost of a car over a number of years and take a benefit in kind allowance for it, but I'm not going to go into that because that's not what I'm really talking about. But there is a different section on the tax website if you're not interested in electric cars and are interested in different types of car. So I'm going to give you a little bit of an example here of my company. And this is the structure which I've created for my property rental company. So I have a limited liability partnership, which is made up of a partner, me, and a limited company. Obviously the limited company is owned by myself, and I've set this up because it works practically, not for tax reasons, but it also offers me some tax benefits as well. So as partner, the partner can buy a car, and anything that the partner makes, what you do is you pass those profits through to the personal accounts. So your annual self-assessment tax would be your personal accounts plus the income from your partnership, and that just added or subtracted from your tax return depending on whether you make a profit or loss. So I will buy the car and I will record the profits against the partner's name. I'll also own assets, so like the house is in my name, but then the rest of it goes through the limited company, which acts to basically finance on all the financing arrangements, and it pays tax on any profits it earns at 19 to 23%. I think it varies the size of the company. It gets tax relief on loans, so if I take a mortgage, the limited company takes care of the interest, and it also pays the expenses, and I segregate that from my personal accounts so that I've got a separate entity. So now I'm going to take you through an example of how running the car through the accounts basically eliminates quite a lot of tax. I should point out that this is all modelled at a higher rate taxpayer at 40%. If you're a 20% taxpayer, it's still relevant, but the savings are a lot less, and that you need to set up a business to be able to do this, and it needs to have legitimate revenue. There's no quick shortcuts around that. In this example, I've got a car here which I'm buying for $23,500, but 95% of the time it's for business use and 5% is for personal use, and that's actually fairly realistic in my situation because I used long journeys in the car and short journeys like going to the supermarket, which are 1 mile journeys, so that doesn't add up to much in personal usage. I then got gross earnings which offset the costs of the car, and they come in from various sources. So the revenue is from my business and the earnings are from my personal tax, which leads to a profit, but it's a much smaller profit. So effectively I pay very little tax. Without a car, if I had the same earnings, I would be paying a lot more tax. So down here you can see £9,400 of tax. So effectively what that means is I'm getting tax relief of £9,400, and that £23,500 car I'm getting for roughly, and I've done the maths wrong here, I've just realised, roughly £14,000, 14,500 if you look at the numbers which I tucked in. Um, so for a 23,000 car, I'm paying £14,000, and if you really believe the list price of the car is £28,000, and then you get two grants. So actually, I'm getting a £28,000 car for £14,000, which is pretty good, and is one of the benefits of having a company set up. I could go a step further, and if I funded this car through a loan, I could put the loan through my company and arrange the financing to be through the company. And what the advantage that gives me is that the interest through the company could be offset against other revenues. So effectively, for a loan of £23,000, which is what I need to buy the car, at an interest rate of 1.69%, which is what I can get for a mortgage on my house, I get relief of £150, which means I'm paying £120 in interest costs for the year. Again, that's pretty good. Okay, so the last thing I wanted to show you was my calculation of keeping my car versus buying an EV. So if I was to buy an EV, the cost of the EV would be £23,500, and I'll get a tax rebate, which would give me some money back. If I was to keep my car, I would have to pay road tax every year, which would be about £1,300. So that's, my car's quite polluting, so £270 per year times 5. Whereas EV, no road tax. Maintenance, I don't know the number, but I put 1,000 as a guess over 3 years, and not so much on the EV, because you get the first 3 years road tax free. Service, there'll be a couple of services in the first few years. Fuel, so I've assumed 10,000 miles, and my car's not very efficient, so 28.5 miles per gallon, and fuel, I've been told, for EVs is about £500 a year. And then, to be fair, if I kept my car, I would be able to claim back tax at 45p per mile. So I've done the allowance on the 9,500 miles, which I would have been able to claim for, which gives me a positive. And then finally, at the end of the period, I'd probably be able to sell my car, but it'd be not worth much by that point, so £1,000, which would give me a cost of £5,580. I haven't included insurance and other costs which are the same on both cars. If I sell my EV, I've assumed that the residual value would be a lot less, so 30% of its original value, and that will cost me £7,000. So yes, the EV will cost me more, but I will have a new car with a 5-year warranty to protect me against things going majorly wrong. And for £2,000, it's worth it, because I get a new car to play with all the gadgets. Any questions, please leave them in the comments section. Any things that you think I've done wrong, let me know, because I'm interested in this personally for my own tax filing reasons. And then finally, if you could subscribe, that'd be really helpful. Thank you. Bye.